Well, foreign direct investment flows to South Africa fell 43.6% in the first half of this year, while FDI into the continent as a whole rose by 5%. That's according to a United Nations report that was recently released. And here to chat about why South Africa is failing to stay ahead when it comes to FDI is independent financial analyst Ian Cruickshanks. Ian, thanks so much for joining us this afternoon. Well, you caught the tail end of that conversation we were having with PPC,
yes.
Paul Staver particularly, and he laid out that investment case for Africa where
Absolutely.
he sees growth in demand over the next 10
10
years.
years.
And very little said about South Africa
Yes.
in particular in terms of that demand scenario, and that one of the reasons why we're possibly not seeing as much investment coming our way as opposed to what we're seeing on the rest of the continent.
Never mind as much. This year to date, FDI, foreign direct investment, has almost stopped. It's not just that it's come down by 43%, it just isn't happening at all. That is the tragedy. Now, why should that be? I believe we know that foreign direct investment into Africa as a whole, you just said, had grown by 5% this year to date. Well, that's pretty substantial because these are big numbers that we're talking about. But I think we're looking at the investors, the Chinese, the Indians, the other Southeast Asian tigers. They're looking for the source of the materials they need to grow their own industrial base. They're looking for the coal mines, the reserves in the ground, and the iron ore and the platinum. They don't just want to buy the output. They want to get involved in extracting that resource from the ground. And that's different to the way we see investment in South Africa.
Absolutely.
Ian, having a look at the report that I've got in front of me, it says as South Africa battles the worst labour unrest since the end of apartheid, the numbers suggest it will face increased competition for investment from its faster growing neighbours. So is this the way that the global FDI scene works? In other words, there's a pool of money that needs to be invested for some of the things that you've just alluded to. And if one country just doesn't come up to scratch, then the pool of funds can be capricious and can go elsewhere quite easily.
Absolutely. And you know, we almost seem to put barriers in the way of foreign investors. We have a difficult regulatory environment. To form a company in South Africa can take many months, whereas I see reports from some other African countries where you can form a company, almost buy one off the shelf within 2 or 3 weeks. That's very different to the time, and time is money, and that's at a delay, costs an awful lot. And in addition to which, there's a sensitivity to the rate of change in business conditions in South Africa. There's the uncertainty over the currency. There's difficulty in saying, how do they understand the supply and cost change in electricity? This is a big factor because foreign investors say to us, yes, first of all, you want us to build a factory. Yes, please. Right, electricity. Can you assure that we'll get it? Can you assure us of the cost at which you'll get it? And the answer are no and no. In many other countries, well, the investors may have to put up their own power stations, but at least they know where they are. They're not subject to indiscriminate changes. And I think that this is the problems we seem to put in the way of foreign investors.
What's your response then, Ian, to the kind of commentary that we've seen emerge out of Ernst & Young, for example? It published a report last week which challenges the perception that the country is actually losing in terms of its status as a gateway to Africa. It says in its report, the coal facts do not support the generally negative headlines about South Africa's attractiveness as an investment destination. Despite the growth in FDI capital, South Africa ranks only 6th amongst African countries in terms of total foreign capital. And sometimes it's the fact that it's not on top of this list that's used as an indicator to support the view that we're losing ground when maybe we aren't.
You know, Alishia, I think the big difference is the other African countries are getting the new flows. They're getting the new investors. China and India, for instance, haven't been that strong investors in the continent up until the last few years. And I think that they're looking ahead to their future and seeing where are they going to get the source, the base for building their own industrial conglomerates. And I think that we may see ourselves slipping down that list a little bit further. Yes, we may still be 6th, next year 7th, and so on. I think that is the risk that we run.
What are the fiscal and policy implications of FDI coming down by the amount that we've just been discussing, and perhaps that trend becoming embellished and perhaps even more pronounced? What are the implications for our deficits, for the South African rand, etc.? Because they all have knock-on effects. I mean, if the rand starts to go, then people that have short-term aspirations for inflows into South Africa also say, well, wait a second, I want to go into the JSE, but I'll lose anything I gain on the rand. So it sort of snowballs, doesn't it?
Yes, it does indeed. And I think what it does, it puts more of an onus on the government in basic infrastructure development. The foreign flows which we may have got could possibly have gone into the railways, the road structures, basic infrastructure, the ports and so on. And now what we're finding is that government's having to do it on its own. We don't see so much talk about private-public partnerships. It's all the public sector. And I think that this is the danger that we're facing, that the government's own borrowing requirement is going to be higher. That's going to put a greater strain on their revenue sources, and perhaps that means slowing down to an extent the positive growth that we may otherwise have looked forward to.
To what extent, Ian, do you give credit to the fact that the capital that does come into South Africa is far more diverse than we see in other countries like Nigeria, Libya, Angola? A lot of the FDI that they see go into the oil and gas space specifically, and many of the analysts out there saying while the capital amount is important, it's the character of that investment that's far more important.
Yes, the difference between, say, Nigeria and some of the other, and Angola and South Africa, is that we have a well-developed resource sector in South Africa. Our stocks of coal and iron ore and platinum, we know where they are. We are developing that. They're not so much green shoots, grassroots developments as, say, the oil industry in Nigeria or in Angola or the gas fields in Mozambique. So I think that it means that to come into South Africa, you can't start up an industry, a whole sector, because it's already been done.